Welcome, everyone. Today we are looking at Topic 6 in your SS2 accounting series, Single Entry and Incomplete Records. This is a very important and practical topic. Single entry is a system of bookkeeping that does not follow the double entry system. It is used by small businesses. Incomplete records occur when some transactions are not recorded. You must know how to convert single entry to double entry and how to prepare financial statements from incomplete records. This topic often appears in your examinations. Pay close attention. Let us begin. First, let me explain what single entry is. Single entry is a system of bookkeeping that does not follow the double entry system. It is a simple system. It only records one aspect of each transaction. It does not record both the debit and the credit. Single entry is used by small businesses. It is used by sole traders and partnerships. It is easy to maintain. It does not require trained staff. However, it has many limitations. It does not provide a complete record. It is not accurate. It does not allow for the preparation of reliable financial statements. Understanding single entry is essential for understanding its limitations and how to convert it to double entry. This is a key concept. Now let me explain the characteristics of single entry. Single entry has several characteristics. The first characteristic is that it is incomplete. It does not record all transactions. The second characteristic is that it is not based on the double entry system. It does not record both the debit and the credit. The third characteristic is that it is used by small businesses. It is simple and easy to maintain. The fourth characteristic is that it is less accurate. It is prone to errors. The fifth characteristic is that it does not provide a complete record. It does not allow for the preparation of a trial balance. The sixth characteristic is that it is not suitable for large businesses. It does not provide adequate control. Understanding these characteristics is essential for understanding the limitations of single entry. This is frequently tested. Now, let me explain what incomplete records are. Incomplete records are records that are not complete. Some transactions are missing. Some accounts are not maintained. Some figures are not available. Incomplete records can occur for several reasons. The business may not have a proper bookkeeping system. The business may have lost some records. The business may not have recorded all transactions. The business may be a small business that does not keep full records. Incomplete records are a common problem. Accountants are often asked to prepare financial statements from incomplete records. Understanding incomplete records is essential for preparing financial statements from limited information. This is a key concept. Now, let me explain the causes of incomplete records. There are several causes of incomplete records. The first cause is the lack of a proper bookkeeping system. The business does not keep full records. The second cause is the loss of records. Records may be lost or destroyed. The third cause is the omission of transactions. Some transactions are not recorded. The fourth cause is the use of single entry. The business uses a simple system that does not record all transactions. The fifth cause is the lack of trained staff. The business does not have qualified staff. The sixth cause is the lack of time. The business does not have time to keep full records. Understanding the causes of incomplete records is essential for identifying the problem. This is frequently tested. Now let me explain the steps in preparing financial statements from incomplete records. There are several steps. The first step is to identify the information available. This includes bank statements, receipts, invoices, and other documents. The second step is to prepare the accounts. This includes the cash book, the sales ledger, and the purchases ledger. The third step is to calculate the missing figures. This includes sales, purchases, expenses, and other items. The fourth step is to prepare the trading account. This calculates the gross profit. The fifth step is to prepare the profit and loss account. This calculates the net profit. The sixth step is to prepare the balance sheet. This shows the financial position. Understanding these steps is essential for preparing financial statements from incomplete records. This is a practical skill. Now let me explain how to calculate missing figures. There are several methods. The first method is the control account method. This uses control accounts to calculate missing figures. The second method is the accounting equation method. This uses the accounting equation to calculate missing figures. The third method is the gross profit method. This uses the gross profit percentage to calculate missing figures. The fourth method is the net worth method. This compares opening and closing net worth to calculate profit. The fifth method is the analysis method. This analyzes the information available to calculate missing figures. Understanding these methods is essential for preparing financial statements from incomplete records. This is frequently tested. Now, let me explain the cash book method. The cash book method is used to calculate missing figures. The cash book shows all cash and bank transactions. The opening balance is the cash at the beginning of the period. The closing balance is the cash at the end of the period. The receipts are the cash received during the period. The payments are the cash paid during the period. The formula is opening balance plus receipts minus payments equals closing balance. This formula can be rearranged to calculate any missing figure. For example, to calculate receipts, the formula is receipts equals closing balance plus payments minus opening balance. To calculate payments, the formula is payments equals opening balance plus receipts minus closing balance. Understanding the cash book method is essential for calculating missing figures. This is frequently tested. Now let me explain the sales ledger control account method. The sales ledger control account is used to calculate credit sales. The control account summarizes all transactions with debtors. The opening debtors are the amounts owed at the beginning of the period. The closing debtors are the amounts owed at the end of the period. The cash received from debtors is the cash received during the period. The credit sales are the sales made on credit during the period. The formula is opening debtors plus credit sales minus cash received equals closing debtors. This formula can be rearranged to calculate credit sales. Credit sales equals closing debtors plus cash received minus opening debtors. Understanding the sales ledger control account method is essential for calculating missing figures. This is frequently tested. Now let me explain the purchases ledger control account method. The purchases ledger control account is used to calculate credit purchases. The control account summarizes all transactions with creditors. The opening creditors are the amounts owed at the beginning of the period. The closing creditors are the amounts owed at the end of the period. The cash paid to creditors is the cash paid during the period. The credit purchases are the purchases made on credit during the period. The formula is opening creditors plus credit purchases minus cash paid equals closing creditors. This formula can be rearranged to calculate credit purchases. Credit purchases equals closing creditors plus cash paid minus opening creditors. Understanding the purchases ledger control account method is essential for calculating missing figures. This is frequently tested. Now let me explain the gross profit method. The gross profit method is used to calculate missing figures. It uses the gross profit percentage. The gross profit percentage is the gross profit divided by sales. The formula is gross profit equals sales multiplied by gross profit percentage. The cost of goods sold equals sales minus gross profit. The cost of goods sold equals opening inventory plus purchases minus closing inventory. This formula can be rearranged to calculate any missing figure. For example, to calculate purchases, the formula is purchases equals cost of goods sold minus opening inventory plus closing inventory. Understanding the gross profit method is essential for calculating missing figures. This is frequently tested. Now, let me explain the net worth method. The net worth method is used to calculate profit. The net worth is the assets minus liabilities. The opening net worth is the net worth at the beginning of the period. The closing net worth is the net worth at the end of the period. The profit is the increase in net worth. The formula is profit equals closing net worth minus opening net worth plus drawings minus additional capital. This method is also called the statement of affairs method. It is used when no other information is available. Understanding the net worth method is essential for calculating profit from incomplete records. This is frequently tested. Now, let me explain the advantages of converting single entry to double entry. Converting single entry to double entry has several advantages. The first advantage is accuracy. Double entry is more accurate. The second advantage is completeness. Double entry provides a complete record. The third advantage is control. Double entry provides better control. The fourth advantage is fraud prevention. Double entry helps to prevent fraud. The fifth advantage is financial statements. Double entry allows for the preparation of reliable financial statements. The sixth advantage is decision-making. Double entry provides better information for decision-making. Understanding the advantages of converting single entry to double entry is essential for understanding why it is done. This is frequently tested. Now, let me explain the disadvantages of single entry. Single entry has several disadvantages. The first disadvantage is inaccuracy. It is prone to errors. The second disadvantage is incompleteness. It does not provide a complete record. The third disadvantage is lack of control. It does not provide adequate control. The fourth disadvantage is fraud. It is vulnerable to fraud. The fifth disadvantage is financial statements. It does not allow for the preparation of reliable financial statements. The sixth disadvantage is decision-making. It does not provide adequate information for decision-making. Understanding the disadvantages of single entry is essential for understanding why it should be avoided. This is frequently tested. Now let me give you sample exam questions to prepare you for your test. What is single entry? Single entry is a system of bookkeeping that does not follow the double entry system. What are incomplete records? Incomplete records are records that are not complete. State the causes of incomplete records: lack of a proper bookkeeping system, loss of records, omission of transactions, use of single entry, lack of trained staff, and lack of time. What is the cashbook method? The cashbook method uses the cashbook to calculate missing figures. What is the sales ledger control account method? The sales ledger control account method uses the sales ledger control account to calculate credit sales. What is the purchases ledger control account method? The purchases ledger control account method uses the purchases ledger control account to calculate credit purchases. What is the gross profit method? The gross profit method uses the gross profit percentage to calculate missing figures. What is the net worth method? The net worth method uses the net worth to calculate profit. State the disadvantages of single entry: inaccuracy, incompleteness, lack of control, fraud, no financial statements, and poor decision-making. Let me summarize everything we have covered today. Single entry is a system of bookkeeping that does not follow the double entry system. Incomplete records are records that are not complete. The causes of incomplete records include lack of a proper system, loss of records, omission of transactions, use of single entry, lack of trained staff, and lack of time. There are several methods for preparing financial statements from incomplete records. These include the cashbook method, sales ledger control account method, purchases ledger control account method, gross profit method, and net worth method. Single entry has many disadvantages. It is inaccurate, incomplete, and does not provide adequate control. Understanding single entry and incomplete records is essential for accounting. This is Topic 6 in your SS2 accounting series. Study it well. It appears regularly in your examinations. Well done.